Hi, I'm Mark Steber, Chief Tax Information Officer at Jackson Hewitt Tax Service. And today I'm here to tell you about the Earned Income Tax Credit, also known as the EITC, which for qualifying taxpayer can be over $6,600. When EITC is added to other credits, it can provide a substantial tax reduction and perhaps greater refund for eligible taxpayers. The EITC is a very well-known and popular credit for taxpayers with low to moderate income. The EITC is a refundable credit, which means you get that money added to your tax refund regardless of taxes you had withheld or paid in estimated payments. Millions of taxpayers qualify for this valuable credit annually. In fact, the IRS reports there are about 25 million eligible workers and their families that qualified up to $70 billion of earned income tax credits each year. But the EITC can be a complicated credit. In fact, according to the IRS, a full 1 out of 5 taxpayers fail to claim the credit each year. That means thousands of taxpayers are leaving millions of dollars on the table each year. Also, if a taxpayer didn't qualify for the EITC last year, they may qualify this year. The IRS states that about 1/3 of EITC eligible taxpayers turns over every year. In fact, the significant increase in the number of people who are unemployed this year is really going to shake up who qualifies for EITC. For example, if you normally qualify for EITC but have been unemployed this year, it's possible you may not have enough earned income to qualify for the same amount you've received in the past. On the other hand, if you've never qualified for EITC before and your household income is less this year and dropped below $51,000, you may be eligible to claim this valuable credit for the first time. So how do you qualify for EITC? Well, for starters, if you're married, your filing status cannot be married filing separate. Only taxpayers who file as single, head of household, qualifying widow, or married filing jointly if they're married can qualify for the EITC. You also need a Social Security number for yourself, your spouse if you're married, and for each dependent child as well. And this part is key. As it says in the name of the credit, you must have earned income, either from a job, self-employment, a side gig, or just about anything where you work and earn income. This is also important. If you received unemployment benefits this year, those benefits are not considered earned income, and you may qualify for less earned income tax credit. In order to be eligible for the EITC, there are certain requirements that must also be met. There are earning limits. There are relationship requirements for dependents, and even age limitations on children. The EITC has some of the most complex rules in the tax code, and you want to be cautious that you claim this credit correctly, because if you don't follow the rules exactly, the IRS may send you a notice or a bill, or even hold up a refund until you respond. Or even worse, if a mistake is made on your earned income tax credit claim, the IRS may even disallow EITC claims on future tax returns. So visit a trusted tax pro to make sure you get the most out of EITC and the other tax credits. Schedule an appointment at jacksonhewitt.com today.